I'm Marilla Fernandez. Welcome to Market Call. Thanks for joining us today. Bruce Campbell on the show, President Portfolio Manager at StoneCastle Investment Management. He'll take your questions today on Canadian equities. Here's how to reach us. 1-855-326-6266 if you'd like to call in. You can also send an email to marketcall@bnnbloomberg.ca. Bruce, thanks for joining us today. Good to see you. We had NVIDIA hit $4 trillion in market cap today, the first company ever to do that. Markets have been hitting records as well. Is the market overheated at this point?
The time frame that you're looking at, certainly off that April bottom, we've seen probably one of the most dramatic V bottoms that we've seen in history. And so that's telling you that, yeah, things are starting to get a little bit extended. If you look at things like the CNN Fear and Greed Index, if you look at the National Association of Active Investment Managers, they're almost to 100% invested right now. So short-term things are definitely probably extended to a bit. I mean, we saw the markets make that real big push to the highs. Now, when we look at it, sort of zoom out a bit and look at the longer term, there's some things that have happened that certainly indicate that longer term, we're actually setting up for higher markets, but it could be chop in the short term. So depends on what type of investor are you. If you're shorter term, then you might want to look at raising some cash. If you're a longer term investor, then this is probably where you're just going to sit and ride out a little bit of volatility as the markets perhaps chop up and down.
We'll talk a little bit more about what kind of investor people are later in the show. But I wanted to ask you right now, is it typical? Are we having a typical July? What typically are July and August like?
Yeah, if you actually look at the July numbers, going back in history for pretty much any market you look at, they're one of the best, usually not the best, but November typically is the best month for the markets, but they're usually second or third, depending on, which index you look at and where it ranks. So yeah, for the fact that, the market's just having a little bit of positive returns here so far in July, that makes sense for sure.
What should investors be watching out for? You mentioned there could be some short-term noise. What does that look like?
Yeah, I mean, obviously there's so much going on right now, and we've seen a year like no other as far as geopolitical news and tariff talks. And now the focus will probably start to turn to earnings and to what's actually happening with those earnings after we finish the second quarter. And then also, a lot of companies after the first quarter didn't really provide much for guidance because of the tariffs. And now we probably want to look to see what they're providing as far as guidance goes forward. And then that will allow us to get a better sense of valuation on the market, because if you look at it from a historical rear view mirror perspective, it certainly is expensive right now.
All right. We do have to leave it there. We're going to line up some phone calls and some emails for you, Bruce. Bruce Campbell of StoneCastle Investment Management with us today. He's taking your questions on Canadian equities. Here's how to reach us. Welcome back. Thanks for joining us on the show. We're going right to your question through an email from Dawn. Dawn says, what do you think of AVN? Let's turn that question over and get an answer today from Bruce. Bruce, what do you think?
Yeah, this is a very small cap company. They're in the hydrogen space and in the helium space. And this is a company that we owned in the past and have talked about a fair bit. And they just really haven't been able to get the execution that they were hoping for. They drilled out some wells. They found great helium in their wells. They started to tie that in. And then what they needed to do next was they needed to get an offtake agreement, and then once that offtake agreement was signed, they would have then go to a supplier who would produce the units to actually process the helium. And they've been sort of stuck right there. There's been a bunch of volatility inside the helium market, and so they've had kind of very promising looks at potentially getting something done, and then it hasn't. The company's raised some money to stay afloat here right now. The CEO is a fairly large shareholder, and I know he's working really hard to get this done. It's probably just a function of time. When it does, that's a market that is really expanding. There's so many more uses now for helium than, most people just think of helium as in balloons, but there's a lot of technology, a lot of manufacturing where helium goes into those processes. So
I was going to say, can you
now.
expand on that a little bit more? Because you're right, most of us think of balloons and helium and nothing else.
Yeah, exactly. So if you were to look at, a lot of technology, manufacturing, and what they do is they use that helium as a cooling source in order to keep machines cooler. If you look at a lot of medical imaging technology, the same thing. They use helium inside of those machines. And what we've seen happen is that over in the Eastern Europe, and if you think, sort of some of the former USSR countries, those tend to be pretty big helium producers. Anywhere there's oil and gas and uranium, they tend to have helium as well. And so that politically hasn't been as easy to get the source from. And then there's also been some issues with some challenges down in the US. They have a fairly good sized helium resource there, but it went from being a government resource to now it's being privatized. And as a result of that, the market itself has been very fragmented and the prices are sort of jumping around on supply agreements. And so that's where there's a huge opportunity sort of longer term as the demand ramps up and then also to get sort of steady supply in North America.
Got it. Okay, let's go to the phone lines then. JC's holding on the line in North Bay, Ontario with his question for Bruce. Hi, JC.
Hi, I'd like to ask about Propel Holdings. It's almost doubled over the past few months. Do you like it still here? And what do you think overall about the Canadian small cap space? Do you think they're kind of due for a little bit of catch up with the overall market at highs?
Okay, thank you for the question. Propel Holdings, which provides credit, Canadian company, it has moved up very well from its April low, but hasn't really reached where it was at the start of the year. Bruce, what do you think of Propel?
Propel is one that we own in our portfolio right now. And I mean, you cannot argue with what they've done there from an execution standpoint with the company prior to being public and then also since they've been public. The management team there has done a fantastic job. You continue to see really accelerated growth. And that's one of the things that we look for in our process is that accelerated growth. And that's what they've been delivering. They do it with using technology. So they use some AI in order to generate the leads and then also to analyze the leads that they get to then put into their system to determine whether or not they're going to lend to them. And that helps them to get better rates as far as bad loans and things like that. Now they've been growing organically, but they also just made an acquisition in the UK. And so that's another area where you'll start to see them start to accelerate that because now they'll integrate that into their operation, bring their best practices in, and then that organic growth will start to really ramp up. So the US is their big market. They have a market here in Canada, and then as well, they're moving into the UK. The management team owns a big chunk of this, so they certainly have a lot of incentive to move this significantly higher. And if you look at the past history of the management team, they've actually already had a fairly significant exit in another vertical where they made a lot of money. So they know the track, they know how to do it. I would suspect that they're probably getting some people knocking on the doors right now, but they know what they can build, and so they're just holding off. As far as the stock price goes, yeah, to your point, it really did sell off. Like when everything happened with the tariffs, it took a big drop, and we were actually really surprised that it dropped as far as it did, considering the fundamentals and the growth rate. And it probably just has a function of more to do with its size and portfolio managers just saying, like, get me out of that specific market. And then JC, to your question about small caps, we actually are starting to see a broadening out of small caps here in Canada and also in the US as well. The small caps in the US tend to be a little bit bigger than Canada, but we are seeing some more broadening out here in Canada for sure.
All right. Hope that helps him. Let's go on to Mike, who has a question. He's calling from Valleyfield today. Hi, Mike.
Hi, how are you? Good morning or good afternoon. Hive Technologies, ticker HIVE. They got the low consensus of around $7, and after that it goes up to like $10 and $12. Is that could that be true? Thanks very much.
Thank you for the question. So this is a cryptocurrency mining company, Bruce. Do you like it?
Yeah, I mean, it's not one that we own right now. We certainly have in the past. And I mean, there's been a fair bit of volatility, not just around crypto itself, but also a lot of these companies. And it, where the focus on the market's been lately is the company's not mining, but actually going out and using Bitcoin or crypto as a treasury asset, and where they're buying the Bitcoin and then leveraging that up and seeing that move up. And I mean, the best example is MicroStrategy in the U.S. Right now, if you actually look at some of the miners, they have started to move here just in the last few weeks. And I think that's probably a function of the fact that crypto dropped down, bottomed out, has had a big move, and is really staying over this $100,000 range. And now what you're starting to see is that probably investors are looking and focusing on, okay, where are the returns going to come from? And if these miners continue to be fairly efficient at mining, then their numbers are going to ramp up over the next couple of quarters.
Got it. All right, Mike, I hope that helps you out. We're going to move on to Elliot, who's calling from Hamilton, Ontario. Elliot, what's your question today?
Good afternoon. Please, how would you evaluate the prospects for Polaris Renewable infrastructure, and what is the current dividend? Do you know? Thank you.
Thank you for the question. Let's bring up the chart for Polaris. It is at 1207 today, but down over the year. Bruce, what are your thoughts on Polaris?
The one thing about, we like the underlying business of Polaris. What we'd like to see is them to continually diversify out their business. So they originally started with just one geothermal energy producing unit. And now they've gone on to a second one, and we'd like to just see that continue. And then as that market cap grows, from probably raising money to do some of these other projects, and then at the same time, the stock price starts to accelerate, then what we would probably see is a little bit more liquidity. Because the one thing about this stock is, even though it has a decent market cap, its liquidity profile isn't fantastic. What you do tend to find with it is that when people are buying it or selling it on any size, so I would imagine if that's some type of institution coming in, they tend to push it up, and they tend to push it down when they're trying to get out. So that's one of the, I would say that's one of the kind of the knocks on it, is it does tend to be a thin trader. As they diversify, that'll continue to widen out and to be broader, and to not have the bid-ask spread that we see right now. And the dividend is, I can't remember where the actual dividend rate is, but it has been fairly consistent over time.
Got it. Okay, we are going to take a quick break, line up some more phone calls and some emails for Bruce Campbell of StoneCastle Investment Management. He's taking your questions today on Canadian equities. We're back in a moment. Welcome back. Bruce Campbell with us today. He's taking your questions on Canadian equities. Let's go to the phone lines. Deborah is on the line from Okanagan Falls in BC. Hi, Deborah.
Oh, hello, everybody. My question today is on chemical CCO. The chart shows an overall uptrend, but a very, very strong uptrend since April. So my question to you is, are these early days, or should I wait for a pullback / consolidation? It has touched down to the 20-day moving average. And my last question is, Bruce, do you own it?
Okay, so a lot of questions in there for Deborah. Let's talk about this uranium provider. Everybody's talking about the forward look for nuclear reactors, for example, to be good. Are you on board with that, Bruce?
Yeah, I mean, there's been quite a swing here in the last few years, I guess a decade or so now, and looks like it's starting to really accelerate. There was a time when nuclear reactors were kind of frowned upon, and now it seems like these kind of smaller, almost mini nuclear reactors are now becoming the trend. We've seen a number of the hyperscalers announce that they're going to be using or doing joint projects for power that would be done by a small nuclear reactor. And I mean, that's going to feed the demand for for uranium for sure. And I mean, Cameco, it's been very interesting, right? I mean, for so many years there, they struggled with all the challenges at Cigar Lake, and now that has all gone away, and now they really are, kind of the world leader. And coming out of all the news that's happened around nuclear and some of the announcements that has come out of the U.S., this has been the leader, and it's been the one that you've seen a lot of portfolio managers go into just because of its size. We do actually own a position in it, and that is as a function of the fact that it ranks really well in our universe. So we've started to see the numbers ramp up from an earnings perspective, and then also technically it's been very strong as well. It does tend to be very volatile though. And so if you don't own it right now, I would probably look at moving into it in almost tranches, where I took probably a third of a tranche right now and then waited for a pullback and bought, my second third, and then buy the third tranche, depending on, kind of what happens with it.
Got it. Okay. So bit by bit, you can jump into that. Deborah, I hope that helps you. Let's go on to John. He's in Toronto with a question. Hi, John.
Hi. I was wondering if you could give your outlook on Beware Holdings, and do you own it? Thank you.
Okay. Thank you for the question. And Bruce, let's turn that over to you.
Yeah, Beware. It's it's one of those companies that for years they just kept executing. It was really small, and the Owen and his team there did a fantastic job. And then all of a sudden, it just caught the attention of the markets as the numbers continue to ramp up. He had a fairly big move, and now it's more or less consolidated here over the last several months. What I think, will probably end up happening with this company is that it eventually probably gets taken out, and, it'll get taken out by a bigger participant in the same sector that wants to have their technology and their customer base, and be able to cross-sell their technology to their existing customer base as well. We don't own it right now. It does tend to be, a little bit thin. If you're able to trade that type of company in your portfolio, for sure, I think longer term it looks really, really, really strong. They just continue to generate cash. I wouldn't be surprised if they would be looking for an acquisition, like a smaller acquisition, Beware would, to maybe go into different verticals or to build a bigger client base that they could sell their product into.
Sorry, how big of a company is it?
From a market cap perspective, I'm just going off my memory here, but I think it's around 60 million market cap, somewhere in that range.
So it's a smaller company. Got it. Okay,
It
John,
is, yeah, it's a micro.
I hope that helps you out. Let's go on to another John who's calling us from Winnipeg. Hi, John.
Oh, hello. Yes, good to see you back, Bruce. My question's on Curaleaf. I know you followed the cannabis sector for a while there, and I wonder if it's still alive in your portfolio, and what would you do if you owned it? Thank you.
Okay, thank you for the question. We've got Curaleaf up here. It's down to $1.31 and a 75% drop over the year. Are you in the sector at all, Bruce?
We don't have any exposure in the cannabis sector right now, and in the past we had fairly good size exposure to the cannabis sector for sure. And really, this has been a real challenge from an investment standpoint for sure, because it seems to be one of the more politically motivated sectors, in that what we're looking for with this, it would be that if there was some type of legislation change in the US that would either move towards legalization, which I think is still a number of years away, or move towards some type of banking activity where they could bank differently, and then that would also allow for different securities exchanges that they could trade on. And then that would allow for different custodians to hold them, and then institutional investors to really come into the sector. And so in the meantime, it's just kind of a bit of a holding pattern here right now, in that you're holding and waiting for that news. And there's been, kind of multiple fits and starts where it sounds like there's going to be some legislation change and everyone gets excited and the stocks will make a move of, 25 or in some cases 50% in a couple of days, to then have that news fizzle and the stock prices will drop immediately and then just drift lower. If you look at the operations of a lot of these larger multi-state operator cannabis companies, they've been doing a relatively good job. I mean, one of the big challenges that they have is they have this tax, which is referred to as 280E, and it doesn't allow them to write off any of their business expenses that a normal business would. And so as a result, if you look at their tax rates, they pay these really high tax rates. And that's what, if we saw that safe banking change, that would be immediately removed. Or if you saw the cannabis plant descheduled down from Schedule 1 to 2 or to 3 or 4, then you would see that 280E removed, and it would immediately mean that these companies were extremely profitable and extremely cash flow positive. And that's the event that, investors are kind of just clinging to, hoping that it happens and then, it goes up. I have no doubt it does, but is that 2 months, 2 years, or a decade away?
So would you suggest people,
that we just won't know.
Would you suggest people take their money and put it in somewhere perhaps more profitable, a company with more growth sort of in the near term?
That's a tough one, right? Again, it depends on kind of what type of investor you are, what kind of time frame you are. That's certainly the approach that we've taken with this, because we think that once the actual announcement was made and it was formalized, these stocks will probably double from where they are. But if that means that they double again over the next year or two, we're willing to lose out on that double to be somewhere else, especially if it takes us 2, 3, 4, 5 years before we actually get to that event, because 5 years ago, we thought that event would have happened between then and now. So yeah, it does make sense to do that. If you're, have a really big portfolio, or this is a really small size of your portfolio, maybe you can just put a little bit in there, have a small position, tuck it away, and forget about it. And then one day it's almost like your lottery ticket that it happens, but you want to focus on the bigger companies, the ones that have the ability to survive for sure.
Got it. Okay, we're going to take a quick break. We don't have any past picks for Bruce, so we're going to continue our conversations when we come back. Stay tuned. Welcome back. Bruce Campbell here to answer your questions. We want to talk a little bit about the type of investor you are at this point. Bruce, I'm wondering, as a first point, when you're trying to figure out sort of where you're comfortable, the first thing that you should consider, I imagine, would be how long you want to stay invested. Is that correct?
Yeah, I mean, there's a few different things that factor into that. That would be, certainly one really important thing is, what's my time frame? And I mean, I think you have to have realistic timeframes, because as we saw just from March, what kind of volatility can happen in the markets for sure. So, I mean, that's important. And then the other thing is that, I tend to talk a lot about sort of smaller mid-cap companies, and they can be really volatile from a stock perspective, but also from an underlying business perspective. So I think it's really important that investors understand what they do when they're making money and when they're losing money. And so I think it's important, if you're losing money, to understand, okay, what do? Do I just follow the stock down? Do I buy more? Or do I just stop myself out of that stock? And you need to know that ahead of time so that you don't get emotional about your decision. You know how you're going to operate. And then when you're making money, I also think it's important to understand, what kind of investor are you? Are you one that's just going to continue to ride and hold that for the duration and make, great money? Or are you someone that's going to, basically harvest your gains along the way and then reinvest somewhere else? So it is important to know ahead of time what you're doing, especially with the small and mid-cap companies.
We talk about risk level and I guess where people land as far as how much risk they're willing to take. How do you determine that? What are the kinds of questions you ask an investor to determine that?
Yeah, I mean, it's always really fascinating when you get to talking to investors about that ahead of time, because, most people will say, oh yeah, no, I'm good. I can handle volatility, or no, I don't want any volatility. If they don't want any volatility, then really the markets probably aren't the right place for them, because we know that the markets are inherently volatile. But if they say, oh yeah, I can handle some volatility, it really comes down to how much volatility that they can handle over what time frame, because everyone will say, oh yeah, I know I can handle volatility, and they'll look back to what's just happened in March and April and say, oh yeah, well, that was easy, right? Like I got invested, and oh yeah, things were down on the tariffs, but yeah, they're right back to where they were, so I'm good. But it doesn't always work that way. I mean, there's been periods of time in history where that can last for a much longer period of time. And you think back to, '08, that was certainly a very scary time. If you think back to, kind of 2001, 2002, 2003, that was a longer period of time. And so investors need to understand how much volatility they can take as far as downside volatility goes, because everybody loves to make money. And then the other thing is what that duration. So if they say, oh yeah, I'm willing to accept, a 15 or a 20% drop in my portfolio, but I can only handle that if it recovers in a year, maybe the markets aren't a place for all of your money. You might want to have a piece of it. But if they say, oh yeah, no, I can do that and I can, hold out for 3 or 4 years, then that's, probably a more willing place for them to be. And then the other thing is what going back to what type of investor they are, if they're adding money to that portfolio, then that also has an impact. So if they have cash flow that they're putting into the portfolio all the time, that'll have an impact because, I think it's Warren Buffett that, talks about the price of hamburgers. And he says, like, if I'm collecting hamburgers for the long run, I want hamburger prices to be cheap right now because I know longer term I'm going to get higher prices. This is the same with stocks. If you know that, you have 10 years, 15 years, 20 years before you're going to want that money, and you're putting money in all the time, you want cheaper prices. I mean, everyone feels good about making money, but you want to be able to withstand that volatility. If you have cash coming into the portfolio all the time, that's going to really help. So there's a number of different factors that you have to look at.
Okay, I do have to leave this part of the conversation here. We're going to line up some more phone calls for Bruce. We're back in a moment. Stay tuned. Welcome back. Let's go to Joe, who's on the line from Montreal today. Hi, Joe.
Yes, hi. I want to ask your guest about TD Bank. It's gone up, obviously, in the last few months, and it's in my cash account. I'm retired. And I'm wondering, is this pretty much close to being fully valued? Should I take some profits here and maybe direct it to another Canadian bank? Or should I, if all the Canadian banks are close to fully valued, should I maybe venture into U.S. banks? I appreciate his answer. Thank you.
Okay, thank you for the question. Bruce, TD has had a run, of course, since coming back from not only April, but last fall after it paid that penalty in the U.S. It's limited in what it can own in assets in the U.S., but is there more growth for TD Bank in the shorter term?
I mean, it's actually surprising how much it has come back. And I think that was a big part of just sentiment got so negative on it that now, bargain hunters have stepped in and the price has come back up. With the penalties that they've had, it's certainly going to put a bit of a damper on their growth. That being said, we are starting to see numbers for financials, both in Canada and the US, starting to accelerate here again. And in Canada, in particular, what we've seen is that, the Canadian banks really set aside provisions for loans, and they set aside those at a sort of a faster, bigger rate than normal, just being really conservative. And now, as long as they don't end up, tapping into that, you should start to see actually really strong numbers out of the banks going forward. When we look at some of the top-down technical work that we look at, you are really starting to see an acceleration in the banks, across the board. They're all coming through our ranks and moving up those ranks. Now, as far as your question goes about, trading this stock for another Canadian bank, that to me, that doesn't make a ton of sense. The sector tends to, move together with the exception of what TD just went through. So if you had a situation where one of the other banks in Canada had, really bad news and it looked like, they were in the penalty box with investors, that might be certainly the time to buy it. What you probably want to look at is where its dividend yield is compared to its historical dividend rate, and then look at that as an intro into that in that specific bank. But with the fact that TD's made this move and all the other banks have been up close to their highs, I wouldn't really be looking at selling TD to go somewhere else.
But basically, you're saying you think banks the stock can gain a little bit more given the fact that they put more credit loss money aside, and we're probably not going to hit that harder landing many predicted? Yeah,
exactly. And then the other thing is, if you go back to their discussion just before the break about about what type of investor you are. If you look at the Canadian banks and look at as an investor over, a 10 or 20 year period, there's really not a better investment. I mean, you can sleep at night knowing that they're secure, they pay a dividend, and yeah, do they have fantastic growth every year? No, it tends to be lumpy where some years they have, sort of moderate growth and other years they have big growth. But that's really the best sleep at night that you can have in your portfolio is something like that.
Okay, we hope that answers your question. Let's move on to Kevin, who's calling from Toronto. Hi, Kevin.
Marilla, thanks for taking my call. Bruce, speaking of volatility, Trian Wells. I've been holding it since 2022, and I'm looking at almost 100% up. My question is, should I just sell it and purchase something else or cut back? Do you see any more movement in it? Thank you very much.
Okay, thank you for the question, Kevin. Bruce, can you tell us a little bit about Trian?
Yeah, I mean, they're in the oil field service business specifically. And I mean, what you kind of have to look at from the bigger picture with a company like Trian is what you think the opportunity is there. And I mean, we've really seen quite a change in the oil field, especially in Western Canada and the US, really, for that matter, over the last probably, I guess, a decade, really. It was a decade ago that they peaked out and then declined, and they really found new religion as opposed to like doing everything to grow. They said, what we're going to do is we're going to get our balance sheets in order. We're going to pay back some of our cash to our shareholders, and we're going to grow at a steady rate. And so for a company like for Trian, that means that they don't have probably the same amount of opportunity that's out there. That being said, I mean, we know what's happening with the LNG. They've just started shipping now, and that's going to be a continued source of new production, and their service is going to be needed for sure. If you look at the stock price just recently, they made this acquisition. I haven't had a chance to really dig into it too deep, but they made that acquisition that the market clearly liked because the stocks had a fairly nice move up following that. So it looks like, the market's valuing that and saying this is potentially a growth opportunity for Trian for sure.
Got it. Okay, let's go to Jim, who's calling from Kingston, Ontario, with a question. Hi, Jim.
Good afternoon. Bruce, I'd appreciate your comments on Secure Waste and Infrastructure, SES. It seems to have had a pretty good run over 5 years, and I assume their services are still required.
Okay, thank you for the question, Jim. So Secure Waste, it's down a little bit today, not much, but at $15.68, 850% growth over 5 years. Do you see more growth ahead for this company?
Yeah, hopefully it's at the same rate. I mean, that's a fantastic rate if you owned it over that period of time. And I mean, it falls into a little bit of the same category as Trian, but different, because what they're looking at doing is they're dealing with a lot of the waste, both water and other waste that comes out of wells, and also with the reclamation process that's needed for wells that no longer are in production. They do some work with that as well. So we know that there's huge opportunity. There's not a lot of competitors for them, and one of the things that they have is when they have this wastewater, it has to go somewhere, and so there's a whole environmental process around how that's looked after, and there's a fair bit of regulatory burden that's needed to get to where you need to be, and certainly they have an expertise in that. So that should allow them to continue to grow in the future. Whether or not it'll be at the same rate, because I mean that's an amazing rate that we've seen, needs to be told yet, but certainly it's one that if you tuck it away and hold on to it, you should probably do pretty well. The other thing with it is it does tend to have a little bit of volatility, so you can always look at if it moves up, you're selling some out, and as it moves down, you're buying some back. Maybe you hold your core position and you trade around it.
Got it. Okay, we have to leave this block here. Bruce Campbell sticking around. He's with StoneCastle Investment Management, taking your questions on Canadian equities. We're back in a moment. Welcome back to Market Call. Let's go to Matthew. He's holding on the line from Unionville, Ontario. Hi, Matthew.
Hi, good morning. Hi, Bruce. Quick question about QNC, Quantum Emotion. They make the quantum random number generators to protect against quantum attacks. Their main semiconductor chip will be coming out later this year from Taiwan Semiconductor. And they also have a crypto cold and hot wallet coming out next year. Just wondering, what's your take on the company and what's the direction of quantum over the next year and beyond? Thank you.
Okay, thank you for the question, Matt. Bruce, what do you think of Quantum Emotion?
I mean, wow, what a stock move it's had off the bottom, I think late last year to where it is right now. I mean, it's had an amazing move, and that's all of these quantum computer stocks have, really kind of come to life, and then they sort of consolidated a bit and come to life again. I mean, their product looks interesting. We've dug into it a little bit. We don't own it. What we're really kind of want to see now is that some of the promise of what the product will deliver starts to come through in revenue generation in the future. I mean, the stock will probably be much higher than where it is. There's lots of talk of, sort of applications in cybersecurity and also in crypto. And so the blue sky there is massive. One of the things that, we always want to be careful with, though, is that sometimes these can be real thematic plays that catch life, and then it takes a long time for the actual fundamentals to catch up. So we want to see some of those fundamentals catching up now to where the stock price is, and that might mean that for us as investors, we would give up some of the return because the stock price will move up in anticipation of that, but we'd like to see that catch up.
Got it. Okay, Matthew, I hope that helps you. We're going to move on to Mike calling in from Toronto. Hi, Mike.
Hi, guys. And Bruce, I'm excited that you may be the first on the show who knows about C21 investments, and wanted to get all your thoughts on it, even though you don't hold any cannabis right now. Anyways, thank you.
Thank you for the question. C21, can you tell us about it?
Yeah, I mean, it's a smaller cannabis producer in Nevada. And as far as operators go, I mean, they've done a fantastic job. So, everyone thinks of cannabis, they think of, specifically they think of Las Vegas as sort of the cannabis market, and all, kind of recreational users that are more related to tourism. That's not the case with C21. Their main facilities and stores are all north of Las Vegas, and they really just sell to the people of Las Vegas, or people of Nevada who are using cannabis. They have really solid numbers. They've done a great job of operating the business, and now what we kind of need is to have a move in that legalization or that schedule change of cannabis in order for them to really benefit and sort of take the next step. And if that was the case, I would suspect that what you would see is one of those big multi-state operators would come in and buy this as their entry into Nevada. But I do have a lot of respect for the management team there, because they've done a really good job in what is a really challenging environment.
Got it. Okay, that's all the time we have for phone calls and emails. But stick around. Bruce is going to share his top picks. That's coming up next. Join us tomorrow for Market Call. Bill Harris will be on the show. He's partner and portfolio manager at Avenue Investment Management. He'll take your questions on Canadian large and mid caps. And if you miss Market Call, check out our daily podcast. You can find it on iHeartRadio and other platforms. You can also watch full episodes on our YouTube channel. We're back in a moment. Welcome back to Market Call. We have Bruce Campbell here, and we're going to take a look at his new top picks. He starts with Kraken Robotics on the TSX. They do subsea intelligence. Bruce, is this the kind of company that might benefit from the investment in defense that we're seeing both Canada, the U.S., and European countries as well putting into?
Yeah, for sure it will. I mean, that's exactly part of the thesis here is that, as defense is becoming more spending on defense, especially with the NATO cap moving up, there's an opportunity there for them in the defense sector, but also in the commercial sector as well. And I mean, what we like about them is that they have, multiple different products and technologies that they have. So they, like, as you mentioned, they do sonar and sensors, and then they have batteries that are underwater batteries that are really kind of exclusive to what they do and are able to withstand the pressure of going underneath the sea. And then they have robotic vehicles as well. They've had super strong growth, both from a top line perspective and from a bottom line perspective. And they just completed this week a $115 million equity raise, which shores up their balance sheet. And I think there's probably two reasons for that. One is because when they're looking at doing deals with, countries or big commercial suppliers, they want to see that the company has solid foundation, has a solid balance sheet. And so they've raised that money, and it was oversubscribed. And then the second is that I know they've talked about making some acquisitions, and so they're probably looking at acquisitions as well. They haven't disclosed exactly what those would be, but that would allow them to have some capital there to make those acquisitions.
Got it. So a couple of things in play for Kraken Robotics. All right, let's move on to your next topic, which is Zcore on the TSX. They do sort of an intelligent surveillance as well. Tell me a bit more about them.
Yeah, so I mean, they were an oil field service firm a few years ago, and then they had demand from one of their clients to build these security towers, and they've really pivoted into that and seen explosive growth. So we always look for accelerated growth in our process, and that's what they have been delivering. So these towers, they'll sit on job sites, if that can be, commercial or industrial. And what Zcore has been experiencing is they started in Canada and they started to sell these, and now they've moved into the US. They've increased their production, so they're producing about 35 of these units per day right now. They actually just had an update, corporate update today. They have just under 2,000 of these security towers with about a 90% utilization. They're saying they're going to exit the year around 2,500 towers, and then next year they're going to be above 4,000 towers by the end of the year with that same 90% utilization. And what they're doing is they've gone out and they're selling these to bigger enterprise customers where, think about maybe someone like a Home Depot. They put these things in the parking lots to deter theft. Maybe it's a big home builder like Lennar. They put them on their job sites to deter theft, and it's all monitored. They have a monitoring station in Edmonton and then another one down in Texas. And they, again, have been seeing amazing top line growth and also amazing bottom line growth at the same time.
Let me ask you, how different are they from sort of the average security camera that some of these companies would put up?
Well, they have a couple of different things. One is that they have a quite sophisticated AI that helps them to really source out what's happening, and so that it can be monitored all the time. But it's not like somebody's sitting there watching just that one camera. The AI would then alert an operator to what's going on or what they see, and then at that point in time they can zoom in and figure it out. So that's part of their big special sauce. And then the other thing is that they're mobile as well, right? So they have fixed units that can go on the side of a building, but a lot of times they also have these mobile units, so it can be moved around into different locations depending on what the application is, which also helps as well.
Interesting. Okay. Let's get to your third top pick, which is MDA Space, which is one we've talked a lot about on the channel. They do sort of the low orbit satellites. They're getting contracts to do sort of deals with other companies as well. Tell me a little bit more about why you like MDA Space.
Yeah, if you have heard a presentation from the CEO, you can't be not excited about what the prospect for this company is. He talks about the fact that the cost of space has dropped so much and that will continue to drop. And what that does is it just opens up the market. As it gets more cost effective for more people, it allows them to get into more people to get into the market. And so over the next several decades, we're going to continue to see that sector have very strong tailwinds. And then MDA, they've been around for 55 years, I think is what it is. and they're really the leader in, space. And everyone thinks of the Canada arm on the space, the old space shuttles, and I think there's one now on the International Space Station. I mean, they've built that, but they also have satellites, they have sensors, they have all the different components of satellites. They produce their own constellations, and I mean, they're seeing amazing growth. They have a huge backlog. And then if you look at just the projects that are on the go that have been, sort of moving through that process of, okay, yeah, we want to build this, to we're going to start to request proposals for pricing. They're in all of those, all those conversations, and they're going to get a certain amount of that business, and it's going to be, allow them to continue to grow. So they're going to have tailwinds for years to come, and they've been operating amazing. They have, again, great top line and bottom line growth there.
Okay, just out of curiosity, who are their competitors at this point?
I mean, there's a couple of big ones out of the U.S., or probably some of the some of the bigger ones for sure. But I mean, a lot of cases, they they'll work with some of those competitors where they add a component, or they joint venture with them to go into a whole project.
Okay, we do have to leave it there. We are out of time. Bruce Campbell, thanks for your time today. Appreciate it.
Yeah, thank you. It was great to join you.
We'll see you again soon, and thank you for tuning in and watching Market Call. We'll see you again tomorrow, and to look at the markets as we head to a break.